Hello and welcome to our channel. My name's Charles Delastic. I'm the Managing Director of Bluebond Tax Planning. We've been helping clients to mitigate their inheritance tax for more than 18 years now. And today's video is slightly unusual in that it's aimed at the children of our actual clients. So it's entitled, How Can 30 to 40-year-olds Make as Much Money in 10 hours as they could in 10 years? So no, it sounds impossible, but it's not actually incorrect. This is a completely true statement. So if your parents have got an inheritance tax problem, very rarely for most of our clients do we save them less than £400,000. So if you consider £400,000, 10 years salary, 10 hours work, that's what it's going to take to resolve the problem. Yeah, there'll be some fees involved, but compared to 400,000 plus in tax, and in some cases significantly more, it's easily going to be worth the time. So that's what today's video is about. So without further ado, let's get into the video. Hello and welcome back. Okay, and as I explained, today's video is all about how 30 to 40-year-olds can make 10 years salary in just 10 hours. So let's get into this and how we explain it. So right at the beginning, if your parents are age 55 plus, which is likely if you're 30 to 40, then, and if they've got an inheritance tax problem, this is what this video is all about. So let's get into that. So the first thing to establish is that if they're worth £1 million now, in other words, had they died yesterday, their total estate after any debts would be worth around about £1 million. Any growth on that estate from now on is going to incur inheritance tax at 40%. Now, we've calculated that for most people where there's, it depends how their assets are set out, but if it's properties and things like that, over around about 15 years, the inheritance tax actually doubles, and over 25 years, it triples. Well, if your parents are in their early 60s now, fairly likely they may live 25 years till 80, 85, and therefore you could find that the amount of inheritance tax that you end up paying could triple. So that's the first point, the growth on the problem over time. So whose problem is it? Well, it's not really your parents' problem, because they're going to be going into retirement, they're comfortable if they've got those kinds of assets, everything's going fine, their pensions are meeting everything, they're going out travelling, they're playing golf, they're doing whatever, and everything's tickety-boo. But eventually, if you don't deal with the problem, at some point when they die, you're going to be writing a massive cheque to the Inland Revenue. So the cost will be on you, their beneficiary, as opposed to on them. So it's not their problem, it's yours. The cultural one is interesting. I found that over the years, I seem to have a disproportionate number of Asian clients. So why is that? Because I'm partially Asian myself? I actually don't think so. I think it's a cultural issue. Asian people seem to be much more inclined to talk to their parents about money issues and that kind of thing, whereas British people tend to be more reticent about it because it's money and it's mum and dad's money, and I don't want to be seen like we're grabbing their money or anything like that. But it's not an issue around that. It's a question of retaining wealth that has been built up over many, many years within the family. And I'm sure they would want to retain the wealth. I'm sure they would rather pay a big deposit for your children's houses when they eventually hit that age. They eventually put your children, their grandchildren, through university education, because what does that cost these days? So I'm sure they'd rather do that than the money going to the Inland Revenue. And you can help and support them to actually achieve it. So talk to your parents. I remember speaking to one client, and he was a business owner. He was very well off himself, no problem at all. He was making 300,000 a year. And for about 5 years, I said to him, look, your mum and dad had got this problem and you've got this problem. You really ought to talk to them. And he kept saying, oh no, dad was an accountant. It's fine, it's fine. He eventually got round to speak to his dad about it. And his dad said, Oh, I'm glad you spoke to me about that, because I've been meaning to deal with it for years, but I just kept putting it off. It just seemed too complicated. I just didn't want to get into it, and I couldn't find anyone to deal with it. So I'm glad you talked to me. Who have you got, and who can we talk to? And they resolved it within a few months, and I think we must have ended up saving him probably more than 3 million in tax. So it's worth having the conversation, is what I'm saying. Okay, next point. Estate protection. So I'm not going to get into this in depth. There are a number of in-depth videos around estate protection, which is one of the things that we do. But it's all about keeping money in the family bloodline. So what does that mean? So inevitably, there's 5 essential problems. As I said, not going to get into all 5, but the main that you're going to understand straight away are: if you get divorced, what's the impact on the money that your parents left you? So let's say they leave you $1 million and you get divorced. 50% of it walks, right? So yeah, that's a big problem. If, you know, your spouse or yourself goes into your own business and that business has a problem and goes bankrupt, does all your money that your parents have left you also disappear? Well, you can protect that with the use of trusts, and this is what we talk about when we discuss estate planning. So it's a belt and braces approach and making sure that we do the right thing there. Okay, and in many cases, you'll save more money on the estate planning side than you will on dealing with the inheritance tax, because inheritance tax gives your parents an allowance of $1 million if they own their own property, and effectively divorce gives you no allowance at all. So it's not like you take $1 million then get taxed at 40%. The whole lot is taxed at 50%. Well, not taxed, but 50% of it could potentially walk, and all of it could walk in the event of a bankruptcy. So the estate planning can be more important in some people's cases than the inheritance tax planning. Right, delay. So this one I always find quite interesting. Usually when you get smart people, and let's face it, most of our clients are pretty smart, they wouldn't have accumulated the assets they did without being pretty smart, right? So why do they delay and delay on it? I never really get my head around it, because generally smart people, when they know they've got a problem, they go in, they say, right, we've got to deal with it. They start and they work their way through and they solve the problem, right? But in this case, they keep putting it off. The number of times we have clients approaching us with quite big estates in their late 80s, and I'm thinking, well, why didn't you call me 10 years ago, right? So what's the issue? So I think it's partially to do with this. It's complicated. In most other firms that you go to, you might have to go and see the lawyers, you may have to go and see accountants, you may have to see a separate firm of financial advisors to try and bring it all together. We as a specialist firm bring all 3 of those areas together: the tax, the legal side and the financial advice, and we make it much easier to solve a very complex problem. But if you are giving them your support, and you're sitting there and going through all the learning and the knowledge and helping them with the forms and everything it takes, as I say, 10 hours work, right? But 10 hours work to save 400,000, maybe save a couple of million, depends on the size of your parents' estate, right? Tiny amount of time for the overall return. So give support, because that seems to be the issue. They can't be, not bothered, but they just keep putting it off because it's a complex issue. Right, so last but not least, obviously, this is what we're talking about, the actual inheritance tax, the IHT. So what are the issues around that? So early. So dealing with it early is important. There's no such thing as too early. I'm dealing with some clients who are 55, right? They may live in 30 years and we're still sorting out their inheritance tax now. Why? Because nobody knows when they're going to die. And the earlier you deal with it, the more options that you have and the less risk that you take in solving the problem, and the more chances you have solving the problem effectively the earlier you take action. And really, the bigger the size of the estate, the earlier you should take the action, is the point. Okay, so can we solve the whole problem? Yeah, the answer is absolutely. there is no such thing as an estate that's too big that can't be solved. So are your parents worth 5 million? Are they worth 20 million? Honestly, it makes no difference. The whole thing can be resolved, providing we get 7 to 10 years, depending upon what the planning is, to resolve the problem. But it can be done, so it's irrelevant to the size. You just got to get in and get it sorted. Okay, so it's giving us the time to make sure we do it properly and that we are able to do it properly, and then you have time to consider your options. So really that's it. First of all, consider the growth of the estate over time. Whose problem is it? Talk to your parents about it. Consider that the estate planning is really important because the risk may be bigger than the inheritance tax. Supporting your parents in the dealing with what can be quite complex issues. Dealing with early and not thinking, oh, it's too big, we can't deal with it. It absolutely can be dealt with. There is no such thing as too big. So last but not least, without over-egging it entirely, whose problem is it? Well, it's not your mum and dad's problem is the answer. It's your problem because you are going to pay the tax unless you take action. All right, thanks for listening. I hope you felt that was useful. If it was useful, please give us a like down below. I know everybody asks, but really, to be fair, if it was useful, give us a like. Would appreciate it. Thanks very much for listening. If you want to know more about inheritance tax, there's lots more videos and whatnot on our channel. Thanks and goodbye for now.